We spend a lot of time in cryptocurrency talking about all the variables that we think are going to have these outsized impacts on the market. Largely, lately, that's been ETF approvals, halving cycles. And those are important. I'm not going to say they're not. They still have a major influence on the space. But there's a deeper shift that is kind of happening behind the scenes that also could be very significant. That is quantitative tightening. You may have heard of this. QT, I'm sure you're familiar with quantitative easing, QE, but quantitative tightening could end on December 1st. That is the policy that's quietly drained liquidity from markets around the world, cryptocurrency, as well as other markets. The ripple effects here are pretty broad. They will have an impact on Wall Street, but that'll also extend as far as their impact into things like DeFi, altcoins, and really every liquidity-driven asset in crypto. And actually, to me, it's already pretty clear that the market is flashing some strong signals in direct relation to this. I want to decode as much as possible what central bank policy means for digital assets in this video. And we're going to talk about 3 altcoin projects in particular that I feel are best positioned to benefit. Welcome to the channel. My name is Maddie, and this is Altcoin Buzz. All the best of luck if you choose to invest. If that's the case, I wish you well. Just remember, I'm not a financial or investment advisor, nor is this video official financial or investment advice. So, the Federal Reserve, as you've probably heard by now, they just cut rates by 25 basis points. And that, hasn't really come as a surprise. That's what a lot of people were already expecting. That was priced in, arguably. There's more to the story, however, because as I alluded to, the more important variable to consider here when it comes to the Federal Reserve is them ending quantitative tightening, or again, QT. That's happening on the 1st of December. And quantitative tightening is just a monetary policy used by central banks, not only the Federal Reserve, but all over the world, to reduce liquidity. It is the opposite of quantitative easing, or QE. In contrast, if you think about it this way, QE injects money into the financial system. But then during QT, we have central banks that sell government bonds. Another option is to allow them to mature without reinvestment, but this is a process that withdraws cash from the economy in a nutshell. It shrinks the central bank's balance sheet, and it's used as a control for inflation. And so the goal really of QT is twofold. Number one, it wants to cool down or control, like I said, inflation. And number two, it wants to slow down some of the overheated markets out there. It does this by making borrowing more expensive with higher interest rates and less money moving around, just meaning less liquidity, right? And that leads to tighter financial conditions. So investors tend to take fewer risks, and there are 2 markets in particular that tend to feel the impact first. One of those markets is equity, and as you probably guessed, the other market is cryptocurrency. The reason here is that they are liquidity-sensitive assets and tend to be the first to fall, unfortunately. So QT influences yields, interest rates, and credit availability. And as bonds are sold, yields rise, which then pulls capital away from risk assets. This can strengthen the local currency and suppress speculative momentum. However, prolonged QT can strain liquidity across global markets, and this can lead to volatility, in some cases even credit stress. All of this means that when QT ends, typically we see the return of liquidity, and risk assets typically rebound. Investors watch these shifts closely. That's because liquidity drives sentiment and price prediction, meaning in short, quantitative tightening removes fuel from financial markets. And this is important to understand in terms of timing. Scale is also significant here, crucially significant, I would say, because it allows you to anticipate how capital is going to flow either into or out of crypto, other markets too, and other high-risk sectors. What this means, practically speaking, is that if you have any dry powder left, you may want to consider using or allocating some of it before prices go up again. To get a little bit more in depth here, when QT ends, central banks stop withdrawing liquidity from the system. And that's a shift that tends to ease financial conditions and can often boost flows into risk assets. Obviously, this includes cryptocurrencies, altcoins. So theoretically, there's a higher chance of capital rotating here. It rotates from safe assets into higher volatility, higher reward tokens, if you will. And so it stands to reason that this would give altcoins a potentially clearer runway, which can lead to altcoins performing kind of where we would expect them to once again. As far as the timing, it would also line up with what a lot of people have been anticipating as the alt season, which has been delayed for the most part. However, and I do want to stress this here, this doesn't automatically mean big asset purchases or, for instance, a full throttle liquidity injection. The policy change itself doesn't guarantee a price rally. Any upside would also be dependent on actual liquidity expansion. And then, of course, there's investor confidence. So this is not an isolated variable. It's part of a multivariate model here. We have to consider different factors. And depending on your point of view, it's also possible that the effect here is already at least partially priced in, because it does look like the market has already expected this whole QT ending, which would, dampen the impact when it does arrive again on the 1st of December. So even in a helpful macro environment, altcoins are still exposed to unique risk. That's always the case, but things like technical or regulatory developments, token economics, network health, relative competition. And so obviously macroscopic uplift helps, but it doesn't substitute for the fundamentals of a project, for on-chain fundamentals. So look, if you're focused on altcoins as we are, we like the idea of this macro shift. It raises the chance of opportunity, but it's not a golden ticket. It doesn't guarantee anything, and certainly doesn't guarantee an alt season in and of itself. But of course, it is an important factor. And with that context in mind, with that being said, let's consider now which altcoins specifically we feel are going to best and most optimally benefit from this policy change. This Altcoin Buzz Spotlight video is sponsored by CoinEx, which is perhaps one of the best exchanges you haven't heard of. Just like Gate.io or MEXC, they offer a lot of coins, but more importantly, they offer the high quality coins you actually want. And right now, for a limited time, all CoinEx users who trade over $50 worth of SWCH, well, they can join the spot trading volume ranking to share 50,000 SWCH. Swiss Cheese and its SWCH token are bringing traditional stock trading and other digital assets on chain. This creates a super smooth experience for Web 2 and Web 3 users alike. It's got great potential as an RWA project. The campaign is live now and runs until 10 a.m. on November 3rd, 2025 UTC time. All CoinEx users who apply to the promotion page can participate. And the rewards are going to be shared by the ranking in spot trading volume. Cumulative trading volume equals buying volume plus selling volume in SWCH markets during the entirety of the promotion. Everybody who qualifies gets to share a reward according to their trading volume. So take advantage of the CoinEx SWCH trading volume promotion and earn rewards while you're at it. You can start today by setting up your account on CoinEx and earn your part of the prize pool. Check out the links in the description of this video for more information. So Solana and the SOL token SOL are the first of three projects that we feel are going to benefit pretty substantially in an optimal sense from the whole December 1st deadline here that we're talking about. And currently, Solana, of course, is enjoying the spotlight with its not one, but two brand new spot ETFs, one, of course, being from Bitwise and the other from Grayscale. The Bitwise ETF launched with $222 million in assets. And on its first trading day, it generated $56 million in volume. And obviously, it's kind of hard to compare and contrast with those sorts of metrics, but those are some pretty impressive numbers. Solana also, of course, saw Western Union on board, which, you probably view to be a dinosaur, as do I, but the fact is that it's still relevant to a lot of people all over the world. So it is significant, at least in the eyes of some. Western Union picked Solana over XRP. Keep that in mind, and is going to move an estimated $100 billion per year on Solana. Again, Western Union, not my cup of tea. I'm sure it's not yours, but the point is that institutions are going to start spending more and more money on Solana. Western Union is pretty much irrelevant to anybody that is watching this right now that tunes into this channel, but it's a net positive in terms of news. Take my word for it. The current price of SOL has been down a little bit. We haven't really seen a strong response to all of the positive news out there, but it's up slightly on the day. We're at $187.87 with a $103 billion market cap as I record. The second altcoin to benefit from the end of QT here in a big way, we feel is going to be Ethereum. ETH, of course, is the ticker. This is synonymous nowadays with Tom Lee's Bitmine. Bitmine's ETH treasury strategy keeps adding to their already massive bags. Check out this video in particular, we broke down the real outsized, I would say, influence that Tom Lee is having on Ethereum in a good way. He's very much the Michael Saylor of the Ethereum space. And look, just in case you're not up to speed with this news, it is significant because Bitmain bought another $135 million worth of ETH, which brings their total Ether bag to a sum of about $13 billion. They've actually publicly stated that they are targeting a 5% share of all available ETH. And ETH, of course, is always the leader when you have that capital rotation into altcoins phase. ETH is on top of this list. It's the first one to benefit. It cascades down into the large caps and the mid caps and the small caps subsequently and in that order. And the current price of ETH is down under $4,000 once again, unfortunately. It's up slightly on the day along with Solana, or similarly to Solana, I should say. If you're happy with a 2x or a 3x here, you might as well load up on some Ether. I think it's going to have a good sort of run here as we finish off the tail end of 2025 and enter into the new year. Last but not least here, we have to consider the SWI network and the SUI token, which is currently, in my opinion, the most exciting emerging layer 1. I say that because there's a lot of technical momentum here in particular, which is attracting institutional interest. We're looking now at SWI's ecosystem and the projects, which are very solid. They keep growing in number, by the way. The SWI Foundation's focus for the coming days is to increase developer activity on SWI, which means more new projects. And a good and active ecosystem offers an upside to your SUI bag, as the case with any altcoin, right? We actually have the Ledger hardware wallet recognize this. They're offering all SWI ecosystem tokens in their wallet now as an update, which is big. That's going to bring in new users, new activity, of course. And so if you're a holder of SUI, you're probably going to like that development because the price is down, to be fair. The price of this token is down. But right now, as I record, $2.38. It's a good entry, in my opinion. Let me know what you think about the end of QT as a policy and whether or not you think it's going to have an impact on altcoins, or if you're perhaps a contrarian or a little bit more jaded on the subject here, do you feel that's been kind of priced in for the most part already? Is it enough to help spark the rest of this crypto bull run during Q4, perhaps Q1 of 2026? A lot of opinions here, a lot of variables to consider, and a lot of nuance, I would argue, as well. Let me know in the comments below, and also make sure to join our discussions on social media, X and Discord in particular. You can find those links and join us in the description below.